The pound yen is giving us mixed signal. The chart is looking like we should sell, but the economic data is screaming there is a buying tendency here. Well, in this video we're going to be analyzing both the fundamental and the technical stance of the British pound against the yen, and we would know fully well what stance to really take by the end of this video. So as usual, we start all the way from the fundamental situation. What really is happening in this market fundamentally? Well, from the surprise engine, we can see that the read is currently saying bullish fundamental only. But let's actually take a deep dive and see where the strength of the bullish fundamental status is coming from. Now right here on the left we have the British pound, and on the right we have the Japanese yen, and just by mere eyesight with the color coding reds and greens, you can clearly see how the British pound is quite better than the yen. On the weight score, we have the weight score of the British pound at 0.19 and the weight score of Japanese yen at negative 0.34. So that already sets the Japanese yen way back and the British pound just a little bit ahead. The COT crowding, they are both bullish on both sides actually, because the COT reports for the British pound is 57.3, while the COT crowding on the Japanese yen is 53.7. So this is why the system is telling you fundamentals only, because even though the COT report looks like it is going to the long side, taking a good look at it, they are going long on both currencies. So therefore it's not a complete long, it's just that one is better long than the other, which is in this case British pound has a better COT stance than the Japanese yen, but they are both on the same direction, long tilt. Apart from this, what other things here? The economic score, the employment data, the inflation data, and every other data is quite clear. Looking at the whole situation, you can see that the issue with the Japanese yen came from its economic growth recently releasing negative data. Same thing we can see for the British pound. However, the negative data are not so strong. They are not extremely negative. But if you look at it in this manner, you might be a bit confused. So let's actually put them together and make it easier for you to read. So right here we have the pair surprise engine. This engine clearly takes out a specific currency pair and does the entire calculation for us. In this case, we're looking at the British pound against the yen, and what we see here is that fundamentally the bias is over the 0.5 mark, making it a clearly bullish market for us to take note of. Fundamentally, again, that is the fundamental bias as it is written here. But the COT pairing is at 29.98%. Obviously, it is going to be confirmed long, but the daily is choppy, which is the same thing as what we read on the dashboard. But if you come down to the chart right here, what you notice is the dashboard has already given us a buy signal a long time ago, back in August 6th. It went all the way till 5 the first time, and then it has dropped ever since then. And today it is reading that 5 again right here. So we now have a new 5 read score, meaning this is the second time it is saying it is bullish. So let's see if that actually extrapolates to what we see on the chart. Let's go. So here we are on the chart. The very first thing you should take your eyes to is the top right corner of the screen, where I have the assets score card. I notice the base is gaining energy while the quote is losing energy, and that tells us one thing. It means that the base currency on the daily time frame is a better buy than the quote currency, which is similar to what the dashboard is currently saying. But we just don't buy in the air. We don't know where to place our stop loss. To do that, we have to understand market structure. What is the market structure here? Well, the market structure here is quite clear. We have the last swing leg all the way to the up. It was a push to the upside, as we see a break of structure to the upside. With this break of structure to the upside, the leg is going to look for one thing. This is the extreme of the leg, and this is another extreme. As long as both extremes are not broken, then we have a reason to keep buying. But this is the problem, the very first problem. Well, the lowest point between the break of structure has been mitigated. Not broken, because price didn't close below it, but it was clearly swept below. That sweep could also lead to more buying power. Why? Because if it had closed below, it has given us a clear intent that any pullback is basically what I just said, a pullback for us to sell to the downside. However, what we saw was a sweep of liquidity, and a sweep of liquidity has one thing: a major push may most likely lead to the other opposite end of the market. So let's take a good look at that on the 4 hours time frame. Being that the market swept liquidity and is beginning to crowd upwards, you can see the market is slowly grinding to the upside, pulled back, gave us a little bit of good pullback, and is grinding upwards. So if we are going to see any form of resistance in this market, it is going to be coming from this upside up here. As you can see, the last swing leg is a push up and a push down. So this is your last swing leg. And within your last swing leg, where is the highest point of mitigation, or rather the highest point of impulse? This is the beginning of the entire impulse to the downside, which led to the break of structure, or basically in this case, a change of character. So if we're going to see any resistance, it's going to be way up here. And if we're calling that the 4 hours resistance zone, and everything we're seeing down here is more like a buying area for us to buy the market to the upside. Now, taking a good look at what has happened, well, we do have a sweep. As you can see right here, this right here is the lowest point of this change of character structure, and we can see how price made a very clean sweep and push above. So now I'm waiting for a pullback. If price doesn't go all the way up here first, if it does pull back, it will be a good buying opportunity in my opinion. Let's check up on the 1 hour just to confirm that this is real. You can see it right here. This low was well swept and price went further to make new higher highs. So I'm expecting the drop to start to occur to then aim for the lower liquidity zone of this market. Anywhere from this price to this zone, which is around the 212.77 to 211.48, I would be looking to be a buyer around this zone if the market should print downwards for us into this area. However, it doesn't mean I'm just going to place a limit entry. I'm simply going to wait for the market to pull back, and if it pulls back, we'll do the same thing over again. Come back, check the economic data, see if the relationship is still good in our favor, check up the comparison. If it's still good in our favor, then we can buy into this market to aim for the upside. Anything other than that, we would stay out of the market and let the market show us signs before we click a buy in the market. If it doesn't do either of these two things, no trade, no takes. This was the analysis of the British pound against the Japanese yen, and if you did learn something new, I'd like you to hit the like button, subscribe, and share this video with somebody who you think may find this trading knowledge valuable to their trading career. I'll see you all in the next one. Peace.